So today I'm going to be teaching you a very good method that I've learned in stock market trading. It's a lie. It's a lie that everybody's got to invest in the safest of the companies, the biggest of the companies, the Tatas and the Reliances. Nothing like that. So what I want to show you today is, by the way, this is my portfolio. Just want to show you so that so that you know I have some credibility in terms of I know what I'm saying. This is a real account. I can click, I can buy, I can sell, and yeah, I have made certain good investments, and they're doing pretty well. So yeah, what I want to show you is my strategy today to understand how to get into a stock, how to pick a stock, how to get out, and it's really simple. So every stock has a flow, and the flow is to go up and down or sideways. But there's one particular flow which is called the rounding bottom. Many influencers fuss a lot about candlesticks and price action and this and that and pattern and this and that. But here I want to show you something where, with limited trading knowledge, if you just know this much, you don't need to know anything else. So here it is. This is called a rounding bottom pattern, and this is the strongest pattern in the stock market. What happens is, once a stock has run up, it's gone to a particular extent and it's topped out, and there's a long downtrend. So once this downtrend is here, you notice that a stock has gone on a downtrend for a very long time. What happens after the downtrend is it kind of loses um, volume on the way down. Okay, so it's gone down, and then for a long time it consolidates. So if you see from September 2022 to May 2023, it's been consolidating for a while. So what happens is, a stock has gone up for a long time. People have taken out a lot of their investments here. Something happened in the company, maybe it showed good bad results, maybe people were happy with the profits, and a lot of profits were booked at this rate. After the profits were booked at this rate, this stock just kept going down and down and down and down and down. You can see, despite the earnings weren't that bad, but still the interest in the stock was just bearish. Once the stock had gone down all the way, it finally found its rock bottom. So the bottom was somewhere here, and you can see there's a consolidation zone that it's fallen as much as it could, and then it goes sideways for a long time. What we notice here is there's not a lengthy enough sideways consolidation at any point. It's a consistent downtrend. So that's what we're looking for, a stock that is fundamentally good, which is also relatively small in size, but is gone on a downtrend. And then we see a long, lengthy span of consolidation into a zone where it's trying to bottom out. And there we see that the initial volume, so we see a lot of volume here. If you see, volume basically doesn't lie. It shows you how many people are interested in it. Institutions or retailers, they can't hide it. So it shows you how much volume was there when this was peaking at its highest. So people were buying and selling things worth 15 million shares and 10 million shares and 6 million shares and 12 million shares. So that was kind of the whole euphoria part of it. And then we can see it's accumulating. It's bottomed out, and now it's accumulating. So you see relatively low figures here. You see like 2 million, 1 million, 2 million, 1 million compared to the 12 million, 15 million we see there. But then we also see people collecting. So here are the big sharks who feel like, here the stock is bottomed out. I want to get an average price of around 300 rupees or 250 rupees. Somewhere between this range is where I want my average price to be, and I feel like this is a good valuation for the stock, and I start collecting here. So what we see is that we have small peaks in volume, but also a lot of dried out volume. So compared to the volume that we've seen here, we see a lot of the volume is dried out again. So compared to volumes that are of this level, we see volumes only drying out to a large extent, from tens of millions to 1-2 million. So we see that going on for a long time. And then what we see is that there's a downtrend, there's an accumulation. So then you see these investors, they keep buying at chunks. You see the price here, they bought at this chunk. You see the price here, they bought at this chunk. You see the price here, they bought at this chunk. So they buy in chunks while the price is bottoming out. And that's a good indicator to know if it's going to reverse again. So once it's broken out of its accumulation zone, which is this zone, once it's broken out of this zone, it sends a signal to all the traders. So most of the country is full of traders. They see resistance zones, they see support zones, and that's what they work on. So traders see that a key level of resistance has been broken with very, very high volume after such a long time. We're seeing, the last time we saw these volumes were about 10 million. Now we're seeing 20 million suddenly. Then again 16 million, and again 10 million. So after such a long phase of the average volume being 1 million, 2 million, 1 million, 2 million, now we've suddenly started to see 20 million, 10 million, 15 million, stuff like that. So we see a downtrend, we see an accumulation, we see the stock breaking out of accumulation. This is where all the traders get in, all the good ones at least. If you want to be a little longer term investor, if you want to stick with stocks for a couple of months or a couple of years, this is a good entry point. You could get in here as well with bigger institutions and bigger players, but you never know how long it might go sideways for. It could go on for another year as well. So if you have limited money, that's not the best strategy. So yeah, what we are looking for, a good breakout of this accumulation phase after a long-term downtrend, and then an accumulation phase, and then a breakout. We join the rally here. And we sit. So what happens is there have been investors who are investing at this rate, and now finally, just when it's going to break out, the investors double down on it with 20 million volume, 10 million volume, stuff like that. So now it's seeing a breakout. Now when we see the breakout, we just sit in the boat of the investors and follow the wave and ride the wave all the way on top. So what happens here is we see a breakout, and then we see more like a higher high and a higher low and a higher high and a higher low. And then we see another consolidation phase. So what we do here, what my strategy is once there is a new consolidation phase after the rounding bottom, and then it breaks out of this with superior volume. So we follow it on the 1 hour time frame. And what happens then is, see such a long consolidation after the whole rounding bottom breakout. You see such a long consolidation, And now when you see such a long consolidation, we're seeing this. So I'll just remove this for you. So this becomes, 1 second, yeah. So this becomes a zone of support and resistance on the 1 hour time frame and the daily time frame. So we want this to break with promising volume. So ideally we'd want the highest candle to break it. We ideally wanted to close with above average volume and beat the highest price. So this is where we see, this is the candle. We see a good amount of volume, 1 hour, 1 million shares bought within an hour. So that's compared to what was happening in entire days during the accumulation phase. So we see a rounding bottom, we see an accumulation, we see a breakout, then we see another consolidation, which is a bullish consolidation, and we see that breaking out on a shorter time frame. So that becomes our call to enter. So say I entered here, once it broke this with good volume, it broke this with good volume, broke this with good volume, it broke this with good volume. So here, this is my entry point. So enter here, say it goes down 1-2%, no problem. But then it keeps going up. What I generally tend to do is just stick to 2%. 2% I get, I'm out. 2% I get again, I'm out. 2% I get again, I'm out. I just keep sticking on to 2%. And the more amount of 2% I get, that's great. Imagine making 2% a month. That's like 25%. You're already a great trader. You're already a great investor. 25% is considered great in investing. That's just hitting 2% once a month. Imagine you hit 2% several times a month. You could be doing 2% a week. So that's about 8% a month. 8% a month is almost doubling your portfolio every year. So yeah, here it is. I know it's pretty shit. I'm no YouTuber. I'm just a trader, an investor. My video quality, delivery, and my designs are clearly not the best. I'll work on that if you really want me to. But this is my strategy. I just had to summarize everything. I'll just do it again. So yeah. So I pick a good stock. I find it to be fundamentally good. It goes on a long as downtrend, goes from downtrend for maybe half a year to a year, maybe 2, but then it consolidates. While it's consolidating, we see less than average volume during its previous peak. The volume dries out for a long time, and then we see little chunks of accumulation with peaks of volume, and then we see a great breakout with lots of volume again. And now everyone's again interested in this stock. The investors, the traders, institutions, banks, everything, the volume says it. So now that it's breaking out, what I do generally in the trading aspect of it, in the investing aspect of it, I would have just entered here, ridden the wave for a couple of months or a year or 2, and then see a crazy ass profit of 100%. So this is basically 183 days, 100%. Half a year, double. But not everything is so certain to keep going in an uptrend. Sometimes it goes up and comes back down, goes up, comes back down. It takes maybe a year or 2 years to actually reach that 50 to 100%. But yeah, what I do is I wait for the breakout, I wait for consolidation, a bullish consolidation, and then I wait for that to break out, and then I follow that on the 1 hour time frame. And once that's broken out with good volume is when I ride a wave. I go up, I take 2%, and I'm out. I keep doing that several times a week. Sometimes it's 4 or 5 stocks, sometimes it's more. And yeah, I keep churning my money like that. So say I have 50 lakhs to invest. I take that 50 lakhs, I put it here, I take 2%, I'm out. I go find the next opportunity similar to this, I take 2%, I'm out. Again, same story. So we see, let's see a fresher stock right now. So IRCTC, for example. So we see the same pattern here. Zoom. It's called the rounding bottom. And then here we go again. So here we see a good downtrend. We see people dumping the stock, and we see consolidation phase, and now it's trying to break out again. So this is a more recent opportunity that we could see in the next 6 to 12 months. This stock would give back roughly 50 to 100%. 50 to 100% in the next year or so. So this is a similar pattern. Sometimes the fake out happens. It does go up and come back down, but then that's the thing, right? I told you, it has to go down, has to consolidate for a long time, not go out and come back in 1 month. So it came back till June, it bottomed, and then by July it's breaking up again. Now that is not what I'm looking for. It could have a V-shaped recovery, but that's rare. What I'm looking for is to go down, consolidate for a long amount of time. So see here we go from July 22 to August 2023 for it to break out again. So now it's breaking out. Now I'm interested, because we see the volume also drying out. We see the volume here. So do you see the volume? Do you see these big ass candles? These big ass candles here, 75 million, 35 million, 45 million, 60 million shares. Do you see that? Then do you see for how long there's been zero interest in this? You see the size of those volume sticks, and see the size of these volume sticks. It's pretty much nothing. It's 2 million, 2 million, 1 million, 1 million, 2 million compared to 60, 70 million. For a long time there's been no interest in the stock at all. And now we suddenly see people accumulating it. So here we go again. Here there's 8 million, there's 6 million, there's 13 million. So we do see good amount of accumulation again. So yeah, now that we're seeing accumulation again, there's a decent opportunity that this will pump again. And now when this pumps again, I'm waiting for the next consolidation phase. So let's say it makes a bull flag, it makes a Davos box, it makes an ascending triangle, it makes any pattern like that. I'm waiting for that pattern, and then once it's breaking out, I'm out. Yeah, exactly like that. See, let's see. This is Motilal Oswal. Okay, I'll give you a better example. This better spun in India is a better example, a more traditional example. So the same thing, rounding bottom, downtrend, consolidation, uptrend, bull flag. Bull flag is breaking out, I enter. As soon as this breaks out, I enter. I ride up the wave, take my 2%, I'm out. It just works like clockwork. So you see so much interest of 8 million, 40 million, 24 million, 9 million, 10 million, stuff like that. Then there's no interest, 1 million, 2 million, 1 million, 2 million, 1 million, 2 million. And then you see again no interest. You see people collecting, but in small chunks. You see above average volume. So there's 5 millions, 4 million, this 1 million. People understood that this is bottomed out and they want to start buying it, and they want to be early. They have patience. Then they buy 6 million shares, 6 million shares. You see people are collecting at this point. And then it breaks out. It breaks out with a volume of 50 million shares. Now everyone's interested in it. Starts consolidating, breaks out again. Breaks out with volume again. 30 million volume. Volume doesn't lie, and volume is the most important thing. So it broke out with volume, and here we are again. Zoom, zoom, zoom. That's it, guys. If you want me to make it more presentable, it's my first YouTube video. If you really think that there was some value, drop in a comment, put in a like, maybe subscribe. But if I get some more motivation from you guys, I'll definitely give you more tips, more advice, more tips on how do you pick stocks, how do you find these routing bottom stocks, build a community of people who've identified these stocks, maybe tell you when to buy, when I'm entering, how do you read fundamentals, how do you say whether the stock is good or bad. So many things we can discuss. So just let me know, and bye bye.